Hey guys, how's it going? It's Andy from Magoo Investing. Happy Friday. Before getting started, I wanted to give a quick kind of channel update for the next couple weeks. A week from today, so next Friday, I will be moving up to Portland and I'm finishing grad school. So I have a lot going on, so it's very likely that for the next maybe 2 weeks, videos will be on the slightly light side as I kind of rearrange my entire life. So I kind of wanted to give a warning on that. In today's video, I wanted to talk about how I've always been profitable on my stock trade since I've started trading with options. This is something I've been really excited to talk about because it is a great example of there's not only one way to play the entire stock market. Yes, you can just buy shares and hold, but I think playing options and my wheel strategy has been very effective, and I'm going to share how I've had a horrible trade actually become positive for me in the past couple weeks, even though the stock is down around 10% overall since I made that trade. Before getting started, I wanted to talk about some of the Tesla news that happened on Thursday, which is really interesting. But before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research. Also, if you've been enjoying these videos, I really appreciate it. Hit that like and subscribe button, as it would help my channel out a lot. So the big Tesla news that happened on Thursday is that the stock price went over $2,000 for the first time ever. And 2,000 is crazy to think about. I remember when I was making videos talking about why I bought Tesla at $250 and how people were like, oh, that's a horrible idea. And now here we are just a year and a half later and the stock price is at 2,000, making it, based off the valuation, it is larger than companies like Walmart, making it the 9th largest stock when it comes to market cap of $370 billion. So market cap is very dependent on stock price, but I think it's really interesting to look at the annual revenue that these companies have been bringing in between Tesla and with Walmart. So Walmart last year, their annual revenue was $523 billion and Tesla was 25. And so far in 2020, Tesla stock price is up 380%. And so anytime you go on Twitter and you see people arguing about Tesla stock, there is kind of a couple trains of thoughts that I see. There's people saying, oh, it's going to continue to go higher. There's people saying that, oh, the bubble's going to burst. And then there's people like, what the hell is going on? And so at this point, I would not be anywhere near Tesla. I definitely missed out at $300, $400, $1,000, $1,500, and now we're at $2,000. So at this point, it seems like a bubble is forming with Tesla, but at this point, the people that have bet against Elon and Tesla in the past, yeah, that was a long time ago when it was the most shorted stock, back when it was sitting around $200. And so at this point, going against Tesla, I think is a horrible idea, but it's going to be very interesting to see what happens. If the market falls, they're going to have to give back some of this increase in stock price of 380% so far in 2020. So that's going to be my number one stock to watch going forward, not because I want to buy it, but I just want to see what happens in the future. So now let's get to today's topic, where I'm going to talk about how I turned around this really bad stock trade and have made it profitable in just a couple weeks. So far in 2020, I've only had one bad trade overall. And when I think about bad, it went exactly how I kind of expected it to go. This was a trade with Macys back in January, I believe. And so this was a very speculative stock. It was a company that I thought was going to be close to going bankrupt. I bought it after bad earnings, and it broke through the support that I had charted, and as a result, I sold at a loss. And I was totally okay with that. That was the plan that I had going in. But since then, I have not taken a loss on any trade. And yeah, you can look at the overall market and say, everything's been going up since March 23rd. But in the past couple weeks, I've had 2 trades that have gone pretty south pretty fast. So I made a video talking about the Sonos trade that I had that crashed after earnings when it went down 13% after hours. And it has continued to fall since then. And I'm very excited to kind of share how I've dug myself out of that hole in a couple weeks once I finally go profitable on that trade. But on that same day, I made a trade with Zynga, which they had positive earnings. And I focused on Sonos that day because it was crashing pretty bad. And I didn't notice the fact that Zynga went up 5%, and then the next couple days it slid. And then I ended up being assigned 100 shares because I wasn't really paying attention, which is 100% my fault. But it's very interesting because all of the options that I've traded very recently have all gone the same way. I sell a put, the stock price goes up, I don't get the shares, and I keep the premium. This is a great example of showing the versatility of the wheel strategy, and let's get right into how I did it. So going into earnings, I've been very bullish on Zynga overall. This is a company that I've talked about a lot on this channel as being one of my favorite cheap stocks overall. So going into earnings, I was very bullish and I expected some nice numbers in the stock price to increase. So I have a couple options at this point. I could buy just naked shares. I could buy a call option, which is pretty risky because if the stock price goes down, I am going to be left with a contract that is worthless, or I can sell a put against my position, which is what I decided to do. So while the price was sitting at $10, I sold a put at the $10 strike for around 46 cents. So the two options that could happen there is the stock price goes above $10 and I keep the $46, or it goes below $10 and I get assigned the 100 shares and also get to keep the 46 cents, which lowers my average cost. And so this is really exciting when it comes to earnings because I was able to get 46 cents, which ends up being 4.6% for an option that I only had to hold for 2 days. I bought this on a Wednesday for the contract that expired on a Friday. That's almost 5% in 2 days, so I will happily take that trade 1,000 times over. But I did not manage it super well. I could have taken my profit and gotten out with like a 4% profit, but I did not and got assigned. So by the end of that week, the stock price was sitting at $9.75, which was below the $10 strike. So I got assigned those 100 shares. And that might look bad, but I was still at a profit considering I got 46 cents, which would lower my average price to an average of $9.54. And so this means that I was at a profit at this point. This is why I really like selling options compared to just buying naked shares for stocks that I can afford. Obviously stuff with Microsoft, I would love to own 100 shares, but yeah, I don't have 20 grand to buy 100 shares. But with a company like Sonos that's trading for $10, I will happily sell an option against it. And so now that I got assigned these shares, I still wanted to hold the stock, but I wanted to make some money from holding it in case it went flat or down. So I sold another call. So the current price for Zynga is $9.43. And as I mentioned, my average price from the first option I sold was going to be $9.54. So I am in the red based off of that, except for the fact that I was able to sell a call for the $10 strike that'll expire next Friday that got me around 22 cents. So at this point, my average is getting closer to $9 while the stock is still sitting at $9.43. So even though the stock has gone down, I'm still in the green. And so this is why I love selling options, because this is a company that I will happily own for a long time. But if it goes down, I'm sure I'll absolutely take as much premium as people are willing to pay me. And if the stock does go up, I'm going to lose these shares, but I'm still going to be making a consistent profit. So instead of just buying those shares like I could have at $10 and being down 6%, I decided to sell options. And as a result, I'm up 1.5% on a trade that's gone down the entirety that I've held it. So this is a great example of the power of options, and I hope people get more interested, because once I started learning about options, it's become my favorite way to play the stock market. And it becomes super interesting because there's so many different ways that you can do it. So I'm really excited to talk about my Sonos trade in a couple weeks once I finally get profitable on that. This was a stock that I was very bullish on overall. The stock crashed around 25% in just a couple days and has continued to fall. And at this point, I'm in the red. But I think with a couple extra trades for these options, I'm going to make this a profitable trade even though the stock collapsed after that earnings report. And I'm going to be really excited to share that all with you. So let me know what stocks you guys are watching going forward. Next week is probably going to be light on the videos, but I hope you guys have some profitable trades out there, and I will see you at some point next week.